Okay, welcome to the Wall Street Crossover Show, sponsored by Admiral Markets and co-hosted by Darren Sinden, who is the market commentator. How are you this afternoon?
Yeah, it's the sun's shining, Zach, and all seems to be a bit better with the world. So
right, same thing with the market as well, is it?
Well, I wish I could say that with a degree of confidence, but I think we'll have to wait and see is the honest answer.
All right, well, let's have a look at what you brought to us today.
Okay, well, just to sort of finish the week, China equities rally 4.8%, and I put on suspected government support. I don't think there was any other reason really for the markets to bounce there. Nonetheless, they finished in positive territory. The rally came late in the day, so we end the week with a crescendo, I suppose. Back to Europe, some other positive news. Swiss second quarter GDP beat estimates, coming in at plus 1.2% against the forecast of plus 0.9%. And I think you'll recall that we've had some fairly mixed data out of Switzerland, so that is something of a positive surprise and something for the SMB to smile about. And speaking of positive surprises, if we jump across Europe to sunny Spain, July retail sales, and I put soar here, that's probably the only word to describe it, because they're up 4.1% versus the forecast of growth of just 0.9%. So the GDP numbers from Spain yesterday, the headline against that was that the domestic component of GDP was doing very well, and I think there's further indications that the retail sector is rebounding there in Spain, obviously from a very low base, of course. And then here, back in the UK, GDP for June up 0.7%. That was in line with forecasts and ahead of the prior read of plus 0.4%. So there is growth in the UK. There was also a suggestion that the services sector is growing strongly here as well. So some more positives for the Bank of England to consider. However, over in Europe, European or Eurozone, I should say, consumer confidence, very disappointing. Came in at minus 6.9. That was in line with forecasts, but it's not really showing any, very marginal signs of picking up, and still remains pretty depressed as an indicator. So again, food for thought for the ECB ahead of their meeting next Thursday. Right,
okay, so a bit of positives and negatives there today. Yeah. Right, on to the European movers.
Okay, well, metals and mining stocks were amongst those making gains today in a relatively flat session for European equities. FTSE 350 mining sector, that's ticker NMX 1770, up around 1.25% mid-morning at 10,200. And one of the world's biggest steel makers, ArcelorMittal, that's ticker MT in Amsterdam, €7.22, up about 1.94% on the day. And I think really metals and miners making a modest gain after the China equity bounce, and also, as we'll see later, some M&A noises in the sector. And staying with the theme of basic materials, Royal Dutch Shell, and here we look at the London line of the B shares, RDSB, the ticker there, £16.97, up around 2.25%. And oil stocks generally bouncing on a combination of the sharp rally in crude oil prices, both Brent and WTI even. Those US GDP numbers yesterday, which were taken very positively, and some broker comments suggesting that the sector's been overdone on the downside now.
Right. I suppose, given how much crude jumped, 2% on Shell is not actually a big amount, but obviously you can't argue with the market. M&A movers and rumours and movers.
All right. Well, we hinted at some metal and mining M&A, and it's appeared Carl Icahn, famous US corporate raider, has announced almost an 8.5% stake in the US copper miner Freeport-McMoRan, which is ticker FCX US. Pre-market, Freeport-McMoRan trading around $11.64, up 14.23%. Carl Icahn's going to seek talks with the management. Various topics are likely to be discussed, mostly around cost-cutting, board representation, and he's seen likely to press for further realisation of shareholder value. Freeport-McMoRan has a market cap of around $10 billion, but we have to think that the 52-week high for the stock was 36.65, so well over 3 times the current value. The stock was up 28% in hours yesterday, as management announced a raft of cuts to spending and production. Now, whether they did that to try and
too much too late or too little too late.
I wonder if they were trying to steal his thunder to some extent. But anyway, that was if you were in the stock, that was a very nice move. Jefferies has come out to say that they feel the shares are worth at least $14. The market, I suppose, is sort of tending to agree with that, given the pre-market move as well. So we wait for Mr. Ican to make his proposals to the board with bated breath.
Well, the ball is in his court. All right, on to the US data points.
Okay, so an interesting day today, because we've got some of the data points that the Fed will be looking closely at in the run-up to its September meeting. So first of all, personal income for July is the month-on-month figure. Interestingly, the forecast here are for a flat read of 0.4%, dead in line with the prior read. And then the other number that comes, well, one of the other numbers that comes hand in hand with that, the core PCE price index. Now, this is a measure of inflation that the Fed watches very closely. There's a core and a non-core figure, but we take the core figure here, the narrower version. Again, the forecast is for modest growth of plus 0.1%, again bang in line with the prior read. Obviously, what we're looking for here in both of these numbers and the rest of the constituents are deviations from these forecasts. So anything above these two levels would be seen as hawkish for rates. A weaker number would suggest lower for longer. So it's well worth watching what happens there. And then the Marmite indicator, if I can call it that, you either love it or hate it, the University of Michigan Consumer Sentiment number for August, forecast to come in at 93.3, slightly better than the prior read of 92.9. But just to give this some context, we're still well below at those levels the Gen 15 highs of 98.1. So the expectation is an improvement in consumer confidence measured by this survey, but nothing like where we were at the start of the year.
Okay, let's go to the US pre-market movers and levels.
Okay, well, the two stocks that have caught my eye today, first of all, Autodesk, that's ADSK in the US, trading around $47.48 pre-market, up around 5%. This is a specialist software and technology group. They provide computer software for professional groups like architects and engineers. They reported numbers yesterday after the bell, mixed results, I think it will be fair to say, and they guided lower for Q3. Citing the switch from a license-based model to a subscription model. And I think perhaps some people are taking the opportunity to not renew their subscriptions or take up subscriptions of their products. So they think that's growing pains rather than anything else. Nonetheless, the market has reacted. Sorry, that should say down 5.04%, not plus 5.04%. My apologies. Right. And then United Continental Holdings (UAL), they are up on the day, $56.66, trading up around 6.18%, and the stock has jumped on news of its inclusion or impending inclusion into the S&P 500 index. You don't see constituency changes too often in that index, so if you do get voted in, it is a big deal, and I'm sure we'll see more about that going forward.
Celebration there.
Yeah, absolutely. And then in terms of the cash levels to watch in European and US equity indices, 61.15, 62.20 is the range in FTSE, still reasonably wide and not much deviation from yesterday, just raising the support level slightly to accommodate the gains we saw then. We're still obviously well below the prior week's highs. In the DAX, 10,185 plays 10,340. Again, I apologise for the wide range, but the volatility and the sharp moves downward recently don't give us much to play off. In the S&P, obviously, US markets were better again on those GDP numbers, so we've got 1942 now. We'd need to break to have a chance of making further losses in the S&P, but equally we'd need to move and stay above 1990 to accrue further gains. In the Dow, 16,460 is the downside level. I think that's relevant in near term. To the upside, 16,730, not so far above yesterday's close, but still a bit to do there if we want to accrue gains again. As I say, the Dow in particular well below last week's closing levels. On the currency front, the dollar appears to have continued to assert itself, at least as far as the euro is concerned. So 112.10 on the downside now is the level we're watching. Plays a 113.03 to the upside. Remember, we were trading well above 115, looking perhaps like to test at 116 and not so long ago. Aussie US dollar 71.20 on the downside, not much deviation from yesterday. Slightly tighter range here today though, with 71.80 now as our upside level. In dollar yen, we're back above the 120 handle, so 120.65 is our downside level, plays 121.20 on the upside. And cable, scratching our head in the office about cable.
Sickly at the moment, isn't
Well,
it?
yeah, I can only think that the interest rate premiums evaporated completely for now, and then maybe people have just closed positions ahead of a long weekend here in the UK. But 153.20 now on the downside, plays 154.00 on the upside. And again, earlier in the week we talked about and saw briefly the move above 158. So it's been quite a volatile week in cable, one way or another.
Right. Okay. Let's go on to your in focus section.
Okay. So in focus, what are we watching? Well, I thought it'd be quite interesting to take a look at the US Treasury bond market, which has historically been a safe haven, and just have a look at the US 10-year bond yields. And the comments here, well, despite recent volatility and residual concerns about global growth, US 10-year bond yields have rebounded away from the 2% level. They didn't quite touch that earlier in the week, but they headed very closely towards it. T-bonds, as we said, are seen as a safe haven in times of market turmoil, and so we might have expected to see more buying of supposed risk-free assets and lower yields as the market moved to a risk-off scenario. However, and probably the main reason why we haven't seen that, it appears that China, or at least we haven't seen the yields come back, it appears that China, who own around 27% of all US government debt, have been selling T-bonds to support both their own currency, the yuan, and their local stock markets. And to give it some kind of perspective, or to give the selling some kind of perspective, in the last few days, China is said to have sold around $143 billion worth of US treasuries, which is approximately 10% of its holdings of those instruments.
Selling the family silver there.
Well, to some extent.
Selling somebody else's family silver.
Well, exactly, to some extent. I mean, people ask, how is China interlinked into the world economy? Well, when we're seeing capital flows like that, it very much is interlinked. Even if, America and China are not the biggest trading partners in the world, China obviously has a fair bit to say about US financing and debt.
And could it hurt the US, this type of activity?
Well, if they were forced to liquidate more, yes, because the US has got a big national debt and needs to be refinanced on a regular basis. If your biggest buyer suddenly turns a seller, then perhaps you've got an issue. Unless things turn absolutely horrible, I imagine they'll probably try and buy them back in due course. But
Okay, well, on that note, Darren Sinden, market commentator for Admiral Markets, thanks for coming in today, and we'll have more after the holiday, I presume, on Tuesday, bright and breezy. That's it for the show, and see you then.